Welcome to The Explainer. You think you know what money is, right? It's the cash in your wallet, the number you see in your bank app. But today, we're diving into the truly surprising, almost magical story of how money is actually made in our modern world. And let me tell you, the truth is way stranger than you probably imagine.
So, let's get right to it. Where does it really come from? If your first thought is a government printing press, well, that's only a tiny, tiny piece of the puzzle. The reality is that money isn't so much a thing as it is an idea, a kind of social technology, a shared story we all agree to believe in.
All right, check this out. This chart kind of blows the whole thing wide open. You see that little bar? That's all the physical dollars and coins in the United States, about $2.3 trillion. But then you look at the big bar, the total money supply. That's over 22 trillion. So, where is the other 90%? What even is it?
Well, it's right here. It's not in a vault, it's not on a printing press, it's just data. Over 90% of what we call money is nothing more than digital ones and zeros on bank servers. It's created with a keystroke. So the huge question is, if it's not being printed, how is this massive digital ocean of money even created? To get that, we've got to understand what's actually backing.
Okay, so to really get how we ended up here, we need a quick history lesson. The whole story of our modern money really kicks off the day we broke up with gold. See, for a long, long time, the dollar had a physical anchor, something real you could trade it for. But that all changed.
For decades, under a system called Bretton Woods, the US dollar was tied directly to gold. But in 1971, President Nixon gets on TV and just, snip, he cuts the cord. This was a huge deal. They called it the Nixon shock, and it completely changed the rules of the game. The dollar became what's known as a fiat currency.
So what the heck is a fiat currency? Well, instead of being backed by a pile of gold, it's backed by a promise. Yeah, a promise from the government. Its value comes from our collective trust in that government, and here's the kicker, from the government's power to demand that we use its currency to pay our taxes. And just like that, there's a constant demand for dollars.
Okay, now we're getting to the real core of the mystery. Who actually creates all this money? Well, think of it like this. There's an architect, and then there are the builders. And I'm willing to bet the builders are going to surprise you.
So, first up, the architect, the Federal Reserve, or the Fed. Now, when the Fed wants to print money, they don't actually fire up a printing press. Nope, they do something called open market operations. It sounds complicated, but here's the gist. The Fed buys stuff, like government bonds, from a regular bank. And how do they pay for it? They just create new digital money, called reserves, and drop it into that bank's account. Boof, new money.
And we all saw this play out in a huge way during the pandemic, right? Between 2020 and 2022. That whole process, called quantitative easing, which is really just open market operations on hyperdrive, created something like $4 trillion in new reserves. That's where that money printer go burr meme came from. This is what they were talking about.
But here is the absolute most important thing to understand about this. This is not the money that you and I spend. It's not your paycheck. It's not the money in your Venmo. The Fed creates base money for banks to use with other banks. The money that's actually in your bank account, that's created somewhere else entirely.
And this right here, this is the big reveal. This is the biggest myth in all of banking. We're all taught that banks are just these boring middlemen, right? They take my savings and they lend it out to you. That's not how it works. Not at all. The reality is that private commercial banks, the builders, create almost all of the money we use, and they do it when they make loans.
Just let that sink in for a second. The moment you sign the papers for a mortgage or a car loan, the bank literally just types a number into a computer and bam, a brand new deposit appears in your account. That money wasn't sitting in a vault, it didn't belong to another saver, it was created out of thin air in that exact moment. The entire US money supply just got bigger because you bought a car.
Okay, but wait a minute. If banks can just create money from nothing, what stops them from just lending and lending and lending until our money is worthless? It seems like a crazy amount of power, right? Well, it turns out there are some really important guardrails on the system.
Yeah, there are basically three big things that keep this money creation machine in check. First, and this is pretty obvious, profitability. Banks are businesses. They're not going to lend you money if they don't think they'll get paid back with interest. Second, there are regulations. They have to have their own cushion of money called capital to handle any losses. And third, they need a supply of those Fed-created reserves to handle payments between banks.
And this table does a great job of explaining the difference between those last two things, reserves and capital. It's super important. Think of reserves as the plumbing in the bank's building. It's the water that's got to flow every day for the system to work. Capital, on the other hand, is like the airbag in your car. You hope you never have to use it, but man, if the bank gets into a crash, like from a bunch of bad loans, that capital is what saves it from going under.
So, if creating money is this easy, what's the catch? Why can't we just create enough money to solve all our problems? Well, the answer is something we've all been feeling in our wallets lately: inflation. See, creating money is not the same thing as creating actual wealth.
And the best way to wrap your head around this is with this quote. It's all about too much money chasing too few goods. Imagine you're at an art auction, and right before it starts, everyone in the room suddenly gets 10 times more money. Are the paintings on the wall suddenly 10 times better? No, of course not. They're just going to get way more expensive because everyone's bidding up the price. The art didn't change, but the value of each dollar just plummeted.
And we literally just watched this exact scenario play out in the real world with, of all things, eggs. First, you had a huge jump in the money supply from all the pandemic stimulus. That's the too much money part. Then, a real-world disaster strikes. The avian flu wipes out millions of hens. That's the too few goods part. It was the perfect storm.
And the result? Well, you remember it. Egg prices went through the roof, from about $1.50 a dozen to, in some places, over $5. It was a painful, real-world lesson. You can create all the digital dollars you want, but you can't type an egg-laying hen into existence.
But here's a wild twist in the story that most people don't know. Just like making a loan creates money, paying it back destroys it. Yep, when you make a payment on the principal of your loan, that digital money effectively just vanishes. It's deleted from the system. So the money supply is this living, breathing thing, constantly expanding and contracting every single day.
So this whole story of money, it's not over. Not by a long shot. In fact, the next chapter is being written as we speak, and it's pointing to a future that might look very different, with less physical cash and maybe even a different role for traditional banks. I mean, think about it. When was the last time you paid for something big with cash? Physical bills and coins are fading fast. They make up just a tiny fraction of how we pay for things now. We're rushing towards a world where money is purely digital, just information, and that really changes who holds the power.
And speaking of the future, there's this big idea floating around called a central bank digital currency, or a CBDC. People call it the digital dollar. The idea is, instead of having an account at a private bank, your account would be directly with the Fed itself. Now, the promise is that it could make payments super fast and bring more people into the financial system. But the flip side? Well, it raises some massive questions about privacy and government control over your money.
Because when you boil it all down, money isn't really a thing. It's not gold, it's not paper, it's not even a line of code. It's a shared story, a story we all collectively agree to believe in. This entire, unbelievably complex system only works because of our shared trust in it. And that leaves us with the biggest question of all. What happens when that story starts to change?